Let's see if this works. Let's see if it works. I don't know if it's going to work or not. I'm seeing people in the chat. I do have the live stream popped up over here on my phone. So we're going to see if that pops up and see if it starts working. But if you are watching this, hey, thanks for tuning in. Unfortunately, Dion was going to join me this morning, but we started having technical difficulties, unfortunately. Let me know if you guys can actually hear me. I want to make sure that my microphone's working. So if you guys will just put a 1 in the chat or something, if you can actually hear me, that would be fantastic. Good morning, everybody. It is Saturday morning. As I said, Dion, he and I were just on a Zoom call, and for whatever reason, we were having a really bad signal between the two of us. We couldn't get it to work properly. So he is not here, unfortunately. But he's here in spirit. What we're going to talk about today on the Saturday financial news, because Zuber has decided to take Fridays off, decided to take Saturdays off. He's a workaholic. Everybody knows that he's a crazy workaholic, but he does deserve to get a little bit of a break. After more than 1,000 days of never missing the daily financial news, I don't know how you don't get sick and miss it at least once or twice. He has decided to take Fridays and Saturdays off. So this morning, I'm going to do a live stream. We're going to answer some real estate questions. We're going to talk about some things. Elon Musk buying Twitter. We're going to talk about the economy, GDP, recession, housing dropping, mortgage rates, working from home, all that type of stuff. If you've got questions, leave them down below. Probably go for 30 minutes to an hour maximum. For those of you out there, I'm actually going on vacation tonight. I leave for Florida. So Mark, I saw you in the comments. I'll be looking forward to seeing you in about another week or so here, but I leave for Florida tonight, and that's what we're going to get into. So, oh, good. My speaker is working. Perfect. Okay, cool. Dion, appreciate you for being here. Sorry that I unfortunately couldn't do a Zoom with you. Let's start. All right. So, starting the Saturday daily financial news. Economy and recession. So, for those of you who are paying attention, right, the U.S. economy grew 2.6% in Q3. It was a little unexpected on Zuber's channel, one rental at a time. People were taking estimates and guesses, and most people were thinking down a little bit. Some people were thinking maybe positive a little bit. I can't remember what Mike's call was, but I think it was like positive plus 0.6 or something like that. 2.6% in Q3 was unpredicted by just about everybody in our realm. So that was a bit of a surprise. However, real estate took a beating. We're going to get into that. So there were massive drops in construction for Q3 for both business building and residential. Residential investment in Q3 was down negative 26%, which is on par with the initial decline of 2020 at the start of the pandemic. Business structures were down 15%. Home prices fell by 1.1% between July and August, according to Case-Shiller, which is the biggest decline in prices since the last housing crash hit bottom in 2012. Now, why I wanted Dion here was so that I could read this stuff off and then let him give his reaction to it. So unfortunately, you're going to be stuck listening to me opine on the topic. So first of all, it's a good thing the economy is growing, right? I mean, we can sit here and say, well, that's a good thing. Now, I think obviously when they go back and look at the growth versus the inflation rate, I'm sure it'll be adjusted further down the line. So who knows where it's actually going to pan out. But technically, by the definition of a recession, we are apparently not in one if we have positive employment growth and we have positive GDP growth. So that's a good thing. We don't want to go into a deep recession. However, I think the Fed is hoping to put us into a recession. Mike and I have had countless chats on this. They want to bring inflation back down to a more reasonable number around 2%. Currently, we're around 8%. We've been in that area for several months now. The housing market was overheated. Mike and I have done multiple reaction videos with Jerome Powell talking about how he needs to see inflation come back to normal numbers before they even consider easing up on rate increases or talk about rate decreases. So while it's good news when we're not in a recession, right? Unfortunately, I think probably in the short term, that means that the Fed's going to at the very least, keep their rates the same. There's 2 more meetings before the end of the year, if I remember correctly, 2 more Fed meetings. And that's not to say they couldn't have an emergency meeting. I think it's probably unlikely that Q4 is negative because Q4 is holiday shopping season, and that is usually historically the best quarter of every year. So I would be very surprised if it goes negative. But I think, as everyone has been predicting, Mike and I have done reaction videos of Stanley Druckenmiller and Warren Buffett and all of these other bigwig economists and investors, including Mike. 2023 looks to be pretty ugly. So I guess keep that on your radar. But Mike is famous for saying that it's going to be a white-collar-led recession. Well, I did find a little bit of info kind of pointing to his opinion right there. So an appraisal tech firm, Clear Capital, laid off 27% of their workforce for a total of 378 people on October 14th. And I'm seeing lenders and Chase Bank and mortgage companies and tech firms in Silicon Valley laying people off left and right. I'm not seeing a lot of articles saying that blue-collar jobs are down, with the exception of what we just read, which was that business structure, investment in building new construction, and if you've heard Mike talk with Greg Dickerson, building is slowing down and coming and kind of grinding to a halt. Well, that's a lot of construction jobs. That's a lot of labor jobs right there. The good news is for any of you out there who are investing in real estate, if you're doing any remodel projects like me, I know my mentor Mark's down in the comments. If you're doing remodeling, one of the struggles has been it's tough to get people out in a reasonable amount of time to get work done on any of your properties. There's been long lines for roofers and long lines for electricians. And so maybe some of these new construction builds that are going away, these workers are going to start moving into actually handyman work and repairman work. You might be able to get things remodeled quicker, which would be nice. I'm going to take a quick look at the chat real quick. Folks, remember, I am relatively novice when it comes to streaming here, so just bear with me. Let me check in with people. Helicopter pilot Caleb, what's going on, buddy? Again, hey man, I'm gonna be in Miami for the next 10 days, or well, on a cruise for 6 of them, but I'll be in Florida, so let's hang out. Maskey Finance, hola amigo. Financial firefighter, another Mark, good friend of mine. He and I just recently did a video where we talked about how Mark Oshiro, a firefighter, decided to start investing in real estate only, it was like a year and a half ago he started. He went from 0 to 14 rentals in 1 year, all investing at a distance out of state. He lives in Hawaii, lucky him, and invests all the way in Pennsylvania. So if you are interested in his story, check that out on my channel. It's the most recent video I uploaded. Dion, howdy. Nathan Murith, good morning. Thanks for doing this. No problem, man. Happy to do so. Andrew Paulo, thanks for being here. What's up, man? How's it going? And Roldan Crespo, sorry if I pronounced names wrong. Good afternoon. Dude, I'm excited for you, man. My wife and I own 8 units in Chicago. Oh, you stud. I have 1 single family home in Chicago. I just finished remodeling. I'm about to close on my cash out refinance on the 7th of November while I'm on a cruise. And it's going to be a Section 8 tenant rented at $1,300 a month. I'm going to release all the videos and the numbers on that. So Andrew Paulo, do you have a good property manager out there? Dude, hit me up on Instagram if you do, or leave a comment down here because I've been looking for a property manager in the Chicago area because mine does not. All right, let's get back to the news. So housing is dropping. I keep seeing articles like this. Housing is dropping, but not in all markets. Recently, Zuber and I did a reaction video where David Green stole all of Mike's talking points. I mean, it's literally word for word. I highly encourage you to go find that video on Mike's channel. We watched David Green from Bigger Pockets go on the Patrick Bet David, Adam Sosnick, Valuetainment YouTube channel, and he was talking about the housing market crash or the potential crash, and he was giving his reasons for why he doesn't think it's going to crash. And I swear to goodness, the man literally copy and pasted Mike's talking points, like word for word verbatim. However, reading these articles, housing is dropping, but not in all markets. There is an East versus West dynamic that's going on here. East Coast, boom. Florida is doing good still. Even Texas is still doing pretty good. California, big time bust. So let's talk about the supply versus demand in the different markets. And you've heard this talked about on Mike's channel. I'll just reiterate the point here. So when you have a market like Seattle, where I live, where the demand was way, way, way up here, okay, because there was all these buyers. There was 50 buyers for every one house. Things were going within 6 hours of being listed with 25 offers over, all cash, bid up 100,000. Well, even though you're rising interest rates, and so that's kind of dropping some of the demand. Some people can't afford to buy it anymore, but you were still at a point where the demand is above what the supply is. And so that's why people were predicting, like Mike was predicting, we weren't going to see a crash, because what's going to have to happen is this demand going to have to come all the way down to actually meet where the supply is and then continue to go beneath it in order for prices to adjust downward. However, in Seattle and California, we are starting to finally see the first chinks in the armor. Here in Seattle's, and Beth Traverse and I actually just did a video on why Seattle is the #1 declining market in the entire country. I haven't published it yet. I'll publish it here in a couple of days. She and I chatted all about it. We reacted to Dave Ramsey giving his take on why Seattle is going down in prices. But Seattle is the #1 declining market in the entire country in terms of prices. And I'm helping a friend of mine, young lady, shop for a house hack right now. And we're looking at things that were listed for $499, but they're staying on the market for 30, 40, 50, 60 days. And I'll explain to you very simple why it's happening. Interest rates have made it so that these investment properties are not good investments, which means the only person that will buy these investment properties like a house hack, a duplex, triplex, or fourplex will have to be somebody who's house hacking. But there's not that many people out there that are looking to house hack. Believe it or not, you'd think in this day and age they could figure out that it's worth it, but believe it or not, there's not that many of them. And so what's happening is there's a very, very small pool of buyers actually looking at these 2 to 4 unit properties. No investor can touch it because interest rates have gone up so high. Your monthly payment that used to be $2,500 is now $3,500 or maybe even $4,000. You're looking at a little 1-bed, 1-bath duplex, 1-bed, 1-bath duplex. It's going to rent for $1,500 aside. You're going to be $3,000 on your way to the $4,000 mortgage. You just can't make sense of the numbers. And so people aren't buying it. And so we're having the opportunity to sit back, wait, watch the price fall, watch it fall again. We're going to start making some disrespectful offers. I watched a video this morning from a friend of mine, Darius, who sent me a video. He said, and I think it was Patrick Bet David from Valuetainment, who was saying, your offer, your first offer should be disrespectful. I always like Mike's phrase, which is like, you should be embarrassed by your first offer. If you don't feel like a little cringy sending that offer in this market at this time, dude, you should have gone lower. If somebody accepts your first offer, you should be mad because you overpaid. So let's go ahead and keep moving. Where else is housing plummeting? A lot of it's above the median. A lot of it is above the median, especially higher end houses. They're either coming down in price or just coming off the market and they're not for sale anymore. Not seeing nearly as much movement below the median. And in the cheap houses that I look at where I invest in, Gary, really not. I mean, I'm seeing a little bit of movement, but in my opinion, it's not a year over year decline. It's, we started 2021, things were just raising way up. They're coming back down, but they're not dropping below 2021 levels yet. Like I'm not all of a sudden finding houses that I was buying at 60,000 that are now worth 50,000. It was 60 to 70 as it was raising up maybe to 80,000. And now it's coming back down to 70, 75, but it hasn't crashed. It's just down month over month. Okay. Elon Musk at Twitter. He walks into Twitter. Hold on. Let me check the chat real quick. Walks into Twitter with a giant sink. I love Elon Musk's sense of humor. I think he's a really funny guy. I truly feel that Elon Musk is an example of why we absolutely should have billionaires. And I understand if you think that he's overtaking Twitter, it's like some political stunt, whatever, we can discuss that. But the man invented PayPal, sold all of it, took all of the money, and decided to invest into SpaceX and Tesla. Let's have electric cars. Nobody liked electric cars. We've had the technology forever. It just never got any traction, any footing. He invents a desirable, it's like the iPhone of electric cars. Everybody wants one. And then he decides to invent rockets and launch them and send them to Mars. So he's walking around and he says to himself, all right, I'm going to go ahead and privately fund my own construction of electric cars, which everyone thought was impossible. And then I'm going to privately fund my own construction of rockets, which NASA and the government, everyone said would never be financeable or possible. And then I'm going to take my Tesla and strap it to my rocket and launch it into space to go around the planet. Oh, and I'm also going to make these rockets reusable so that they can land, which everyone thought was impossible. I mean, he's just a weird, crazy supervillain that isn't hopefully going to be a supervillain. I hope not. Be Iron Man. Don't be a bad guy. Anyway, so Elon Musk has taken over Twitter, and he goes into Twitter day 1, day 2. He's officially taken control of Twitter, fired the current CEO, CFO, chief legal officer, and chief customer officer. But again, don't feel too bad for these guys because between the 4 of them, they are going to be walking away with a combined $88 million in golden parachutes. So before you feel real bad for these guys being ousted by old Elon, they are walking away with a significant amount of money. Now remember, Twitter is a company that has never made money. It just doesn't make money. And I don't understand how. Like every other social media platform, why don't they just sell enough ads to make money? There's not that much work that needs to be done to maintain the servers when compared to like other types of companies. So it's confusing to me how they can be so unprofitable. But most of the controversy with Elon taking over Twitter is political. We don't really need to get into all of the politics behind it, but obviously one side fears that he's going to allow for egregious, awful, terrible speech, and the other side sees it as a champion for free speech. Wherever you fall down on it, there is a major shakeup. We'll see if he can turn the company profitable. We'll see what changes he makes. Maybe he'll have an edit button. If you use Twitter, dude, let me know down here in the comment section, because like I use Instagram, TikTok, YouTube, Snapchat. But Twitter, I mean, I've gone on it once or twice when I was working in the police world, because for whatever reason, all of the anarchists and rioters love to tweet exactly what they're doing and where they're going. So they're like, oh, well, they're going to go make a push at this precinct. Let's go over here, because I'm following them on Twitter. Not the smartest people, but, you know, when you dress up in hockey equipment and go throw Molotov cocktails, you know, it doesn't really take a lot of brain thought there. So I'm going to get back to these comments real quick, make sure I didn't miss anything. Financial firefighter Mark, who does have a YouTube channel, you should check it out. He's a good dude. He goes, thought you were shouting out to me, thought you were coming to Hawaii. I guess your mentor is more important. Mark Ashira, I would love to come visit you in Hawaii too. But yes, I am going to go see Mark Maskey Finance, who, as he says right here, is a retired cop, and I call him my mentor. That is true. I have known Mark now for, Mark, how long have we known each other? 2018? 2018 to 20, yeah, we've known each other for 4 years. We will meet in person for the first time in like 8 or 9 days. Expect a live stream from Mark and I. Unfortunately, I am not as savvy as Dion and Mike Zuber with the live streams from Zoom. So Mark and I will do one with this camera in person in Florida, maybe at his pool. Mark was also a victim of Hurricane Ian, so if we don't go to his pool, you know why. Dion says, every time you hit the like button, an angel gets its wings. That's absolutely correct. And a quote from my favorite movie, It's a Wonderful Life, although I think it's been changed slightly. Dividend Dave, hope you're doing well with your first house hack. Congratulations, by the way. Well done. Let's see here. Okay, I think we've got through all of them. Adam Calhoun, hey, MM, what's up, dude? What's up? M&M, yes, I'm an off-brand generic version of M&M. I'm M&N because my last name is Mike Newton. There we go. That was cheesy. Okay, another article that I read that kind of piqued my interest as I was considering topics to talk about for the Saturday financial news. Working from home. Bit of a controversy. A lot of people have, over the last couple of years, thanks to the pandemic, gotten very accustomed to working from home. And I'll admit, I completely understand the appeal, the allure. It's very, very nice to be able to wake up and clock in and then walk down and make yourself coffee and, you know, turn the TV on and just sit there in shorts and a t-shirt. And then, oh, you got your meeting. Okay, so you attend your meeting and you got your background all blurred out. You can only see from here up. So you attend your meeting and then the meeting's done. And yeah, I'll check my emails. And I mean, I get it. And I'm not saying that everybody who works from home is lazy or taking advantage of the system or anything like that. Not at all. However, if we sit here and pretend that nobody's doing that, that certain time is probably being siphoned off to more leisurely activities, I think it'd be disingenuous if we would admit for the possibility that that might be happening. So employers are starting to crack down. We need you back in the office. We need you back at work. Back on Elon Musk. He's famous for saying people that work for Tesla need to get back into the workspace. And his reasoning is he wants the collective brain power of these people competitively working together and against each other to fuel the vision for his company. So I can understand why he wants them back. I think that it makes a lot of sense. I also think there's a lot of different opportunities to work from home that makes sense why you would still want to work from home. A lady friend of mine, she does a lot of like purchase orders and things like this for a clothing company. Doesn't necessarily need to be in an office to do that type of stuff. If she was in an office in a cubicle, she wouldn't need to interact with anyone. She's just forwarding emails and Excel spreadsheets and things like that. So let's see what they had to say. So working from home, the article I read was, here are the best ways to convince your boss to let you work from home forever. Number 1, explain how it's better for the business. Number 2, win your manager's trust. Number 3, bring evidence of your continued performance. Let's talk about those first 3 for a second. So I guess if you're, and this would be an interesting dynamic, excuse me, boss, why don't you have a seat for me real quick? I'm going to educate you on why it would be better for you to let me stay home and cyber commute in. Tough conversation, tough sell, but maybe you could make it happen. Probably easier if you've already been working from home and you're going to make your case to stay working from home. But if you're the type of person who has a job and you guys weren't working from home and now you want to, obviously there's going to be some industries that's not possible. It's probably only tech industries, it really is. But I guess their advice is explain how it's better for the business. And if it's not, well, it's going to be tough to sell. Number 2, win your manager's trust. Yeah, I think a lot of managers, rightly so, are concerned that maybe they're paying for 8 or 10 hours and they're not getting 8 or 10 hours worth of work out of somebody. Now that, of course, leaves the discussion for us to talk about, which is not all jobs. Sometimes jobs don't have 8 or 10 hours worth of work for you to do, and you're kind of more in an on-call position. Again, the individual I mentioned earlier, a friend of mine who works from home, she has to get her order sheets and her purchasing orders and all that stuff submitted. But once it's submitted, she's really just kind of standing by. And if there's an issue with anyone else, they email her and then she has something to do. So in those cases, yeah, there is a lot of downtime, and I could see working from home being beneficial. Bring evidence of your continued performance. Well, I think that goes without saying, whether working from home or not, you need to be able to prove that you're actually getting your job done. Okay, next 3 things was, if you live with vulnerable people, ask your HR rep what your rights are. All right, so yes, exploit Nan and Granddad for the fact that COVID, being 2.5 years old, still might be coming after them, so you need to work from home. I suppose if you can make it work. Number 5, explain how the decision affects organizational values. Yes, use their mission statement against them. And right here in the mission statement, it says that we want our company to be a great, happy, wonderful place to work. So I'm going to support that by saying I don't want to show up, but actually just commute from home. Number 6, pitch remote work as an experiment. So I guess if you haven't tried it, let's just experiment. Good luck with that. But the reason I wanted to talk about the work from home phenomenon, the phenomenon that we're seeing where people do not want to let it go, they don't want to walk away from it, is because I want you to think about what's happening with renters who are now being weaned off of government support. I'm having this experience right now. I have a tenant. And I did a video where I thought I was going to have to evict him. We actually took him to court for an eviction. Now, I've had this tenant for almost 3 years, done everything I could to help them. They've always had a history of paying late, but paying their late payments, and they get it in. Occasionally, they'd miss a month, but the next month they'd pay double at the beginning. And I was working with these people. Most of the time they've been my tenant has been during COVID. And so I was trying to be understanding, especially at the beginning when things were difficult and things were, factories were shut down, 2 weeks to flatten the curve, remember? And so, trying to be understanding with these people, they were paying, but it came to a point where they got COVID, so they had to miss out on like a month of work. Now, there was COVID assistance in Indiana where I have this rental, and the COVID assistance would pay for their missed rent. For whatever reason, they just wouldn't take the time to go and apply for it. We couldn't figure it out. They just stopped paying for like 2 months. So finally, we go through the eviction process. They come in, the judge orders them to pay and go through the COVID back pay system. They got a total of 8 months worth of rent paid for, free and clear. 8 months. They only had COVID for like 1 month. They didn't pay me for 2 months. Then we go through the process and they got a full 8 months covered. Now, you and me, if I'm sitting here saying to myself, I got my mortgage payment for 8 months. I'm saving every extra penny, thanking God, wonderful good fortune. I'm glad I wasn't sick enough to actually be seriously ill, but I'm going to save up all my money. And if you're the type of person who has debt, pay your debts down, get a little security fund stowed away so that you can take care of yourself if you get COVID again, God forbid. So 8 months, they get their rent paid for free, all the way from like February to October. Their rent is now due October 1st. No, excuse me. It was all the way from January to September. So the rent comes due on September 1st. Again, this is one of my tenants. Rent is due on September 1st. And they say, yeah, well, we want to move, that we're not looking to renew our lease. And my property manager was like, okay, well, they're going to move. And I was like, all right, fair enough, because we're renting it at $950 and it could rent for $1250. So I'm not going to complain if they leave. They start shopping around and they realize that everything they want that's the same size is way more expensive. So they decide, okay, we're going to stay. We're actually going to renew in September. So they tell my property manager they're going to renew. They don't. They don't pay. She doesn't hear from him for a few days. Now, what frustrated me with her, and she usually does a really good job of this, is she did not post the statement, like the eviction notice. And I don't know exactly why she did this. I need to have a conversation with her about it still. She goes, yeah, they told me they were going to pay. I assumed that they were. Well, unfortunately, you can't just assume the best. They didn't pay. And so she's like, okay, they're going to pay before the end of the month. Well, come October, they still haven't paid. So I was like, look, let's post the eviction notice already. So she posted it. And now we're going through an eviction process. We won't even be able to get them out until the first week of November because the courts were so booked up. But the reason I tell you this long story, not just so that I can waste your time, and for the 15 of you in here watching, I appreciate it. The reason I tell you this story is because I'm drawing a parallel listening to this story, listening to the stories from the lumberjack landlord, Matt, who's talking about his 3 tenants he's having problems with. People who have gotten used to the government taking care of them it's going to be very, very difficult for them to go back to taking care of themselves. At the very least, it's going to be very hard for them to go back to paying me rent if they were my tenant. Now, if they go through an eviction and they go through that struggle of having to be evicted and shocked back into reality and awaken from whatever dream world they're living in, yeah, they're going to have to come to terms with, if they want to get a new place, they're going to have to apply for like Section 8, or they're going to have to go back to paying rent. But unfortunately, just like the workers who are working from home, not wanting to go back into the job, even though that's been the cultural norm since the dawn of the Industrial Revolution, as soon as things get easy, as soon as there's subsidies, as soon as there's, what's the right phrase? I don't know. As soon as like you make exceptions and you make things easier, people are not going to want to give it up. This is why Mike always talks about wages being sticky, even house prices being sticky. Nobody wants to go back to what it was before. Nobody wants to take the cut in pay, the cut in the decrease in the value of their house. That's why sellers are out of touch with reality right now. And I'm experiencing the same thing with my renters. Unfortunately, I'm going to have to evict them. Now, luckily for me, I have 8 properties. I have 10 units. I have 2 units that are under construction right now, BURR projects, so they're not paying me rent. I have 1 tenant who didn't pay rent this month, very surprised because they always do, so we're figuring out what the problem is with them. They've been posted with a notice. And then I have another tenant that I'm now going through an eviction. So this is why it's very important to estimate your numbers conservatively when you do the math on your rentals, because I got 8 properties. 4 of them at the same time aren't paying. That's a problem. However, even though 4 properties at one time aren't paying, I'm still positively cash flowing off of the backs of just 50% of my rental properties being liquid right now, or producing liquid cash for me right now. So that's why I always encourage people to estimate conservatively. I've got multiple videos on my channel talking about how to run the numbers. That will keep you from getting into trouble. Now, again, 2 of them are under construction. That's not poor management on my part. That's just, they're doing BURR projects, so there's nobody living in them. But however, they're both about to be rented out, and once they do, I'm going to be rolling in it. So I just think it's a very interesting psychological phenomenon where we don't want to give up what we've got. If it had been me, I would have been saving just stacks of cash, ready to pay my rent or move out to a better place if I really wanted to. But for whatever reason, 8 months of free rent, they couldn't even save up enough to pay month 1 when it was finally due. It's just very odd. So let me get back to the chat real quick, because I haven't been paying attention. Let's see here. Okay. Mark says time flies, or Maskey Finance says time flies. Yes, it does. Adam Calhoun. Hey, Millennial Mike. What's up? Dorian Sanchez. Hola. Maskey says no AC and no hot water here. Yeah. So my buddy Maskey Finance, who does have a YouTube channel, you guys can check that out if you want. He owns rentals in Gary, just like me. His house was in the pathway of Hurricane Ian. I had planned, the whole reason I took a trip to Florida, the entire reason I took a trip to Florida is because for the last couple of years, Mark's been saying, oh, you got to come visit, see my new house, see my new property. We can go kayaking in the canals. You can swim in the pool. We'll go check out all these places. I booked the trip. I buy the tickets. I've got the time set aside to hang out with Mark. Hurricane Ian comes in, beats up his pool cage, destroys the canals. We can't go kayaking. No AC, no hot water. He barely had internet, and for the first couple weeks after Hurricane Ian. So anyways, I'm getting an Airbnb in Miami. Mark's going to drive and visit me. So that's just how it's going to be. Adam Calhoun, I'm still looking around Gary, Indiana. Super cool. Looking to acquire my second rental there or in Hammond in the next 6 months. I think that's a fantastic goal, Adam. I don't know who you're using as a property manager. I love Hammond. I've recommended multiple people to buy in Hammond. I surprisingly don't own anything in Hammond. I have a couple that are really close, but Hammond's great. Gary has been dubbed America's most miserable city. 3 times the national poverty rate, 3 times the national crime rate. It's a depopulating city. It used to have about 200,000 people. Now it's about 70,000. So when you Google Gary, Indiana, should I invest in Gary, Indiana? You'll probably see a video or 2 from me. You're welcome. But almost everything you see is unbelievably negative. Adam Calhoun, if you haven't watched Maskey Finance's channel, you should, just FYI, because he has 20 plus rentals in Gary. So he's another great expert if you weren't aware of that. I say this all the time. There are winners and losers in every market across the country. In every single market, there's people who are investing successfully and people who are investing unsuccessfully. So the best thing you can do is find who's investing successfully and then copy what they're doing and do it yourself. You don't need to reinvent the wheel. You don't need to come up with some new idea. You just need to cheat on the test and plagiarize somebody else's proven system of how to be successful. And you will be successful. That's what I did copying Mark. That's what Mark did reading all the books, copying other investors. I'm not here trying to invent some brand new app. I just want to do what I know is going to work. Buy and hold long-term rentals for cash flow. Even with 4 of them not paying me in 1 month, I'm still positive because I conservatively run the numbers. That's my advice. Okay, I think I got through most of the Saturday financial news topics that I wanted to talk about. 30 minutes of time, so I'm not quite as quick as Zuber is, but you have to bear with me. I wanted to do a reaction video with you guys. I want to see what you have to say on this. I was really, really hoping Dion and I would get a chance to do this reaction video together. But as I mentioned earlier, technology problems, so I'll probably have to do it myself. Actually, you know what? I don't even think I'll be able to do it myself because I'm not even on Zoom. I'm on the YouTube live thing, so I can't even stream a video. I'll have to figure out how to do that later. But we'll talk about it. So I'll have you guys look for Dion and I doing a video together where we react to Dave Ramsey's show, the Dave Ramsey show, being anti-house hacking. Let me give you a little context. So I had one of Mike's subscribers message me on Instagram. I get videos from people all the time saying, we want Zuber to react to this video. We know you're the guy to message so that you can do a reaction. So I get this video. Dave Ramsey's on vacation. He's not hosting. Kind of like Mike's off right now, so I'm doing this in his place, even though it's not on his channel. Dave Ramsey has a couple of his co-hosts, a couple of younger millennial types sitting up there. Lady calls in. She goes, hey, I bought a duplex because I was trying to do the house hack method. Unfortunately, it's under rented. I haven't raised the rents, and I'm not making as much money as I thought I was going to. Dave says that I should have paid all cash. I didn't pay all cash. I got a loan on it. So I'm thinking I need to sell the property because I got to get out from under this thing. And if I sell it, at least I'll break even. The hosts on the Dave Ramsey show, the guy, he's like, well, I'm glad you just illustrated how all those TikTokers and all those YouTube guys and how they talk about house hacking and how it's good. I'm glad you just illustrated for us that it doesn't actually work. And his exact quote was, if you hear the term house hacking, you should run. And so Dion and I are going to have to do a reaction video for this because he's the king of house hacking. So is the lumberjack. And Dion just wrote in the comments right here, I haven't raised the rent. Reaction done. Exactly. Now, to this young lady who called in, to her credit, right, it can be very, very difficult if you're thinking you're doing the right thing by watching a lot of real estate investing content, right? Hey, I want to be well versed on this subject, so I'm going to watch a bunch of real estate content. But if you get perspectives from different mentors who have opposing views, completely opposing views, Dave Ramsey versus whoever taught her about house hacking, it's not going to help you out. So she didn't raise her rent. Well, that's the first problem right there. She should have walked in with a binder strategy that Dion talks about on his channel and said, look, you're 40% under. We're going to get you a little bit closer. That right there will immediately begin to ameliorate her situation because she's going to be bringing in more money. Number two, if she didn't, and I don't know how you could make this mistake, but before you close on a property, when you're doing your due diligence, you look at the rent rolls, you look at the current lease. First things I always ask, are there current tenants? Yes or no? Okay, there are. What are they paying? Okay, they're paying $1,500 a month. Cool. How long is their lease good for? Oh, it's good for another 6 months. Okay, cool. I want proof they've paid on time for however long they've been there. Okay, good. We've got proof that they're paying on time. This is what they're paying. And their lease is good through this point, so we couldn't raise their rents until then anyways. And if you get this information prior to closing and you know that they're paying 40% below, they've got a year left on their lease, or the current owner's currently going through an eviction or something, you should know all of this before you ever close on the property. So how she could make these mistakes, Mike's opinion was that he thought it was a plant call, that he thought the call was fake, and they were just using it as an example to illustrate how house hacking is bad and you shouldn't do it. Which, hey, that's possible it is. Maybe she jumped into investing in real estate without learning enough about it. Maybe that's what happened. I don't know. But at the end of the day, this should have been a very easily avoidable mistake. You should have gone into the deal knowing exactly what the tenant's paying, how long they've been there, how long they will continue to be there, what the rents for the area are, and have a game plan to get those rents up. And then know you can weather the financial cash storm between today and when you have to get the rent up. And even have extra reserves set aside in case they decide to play hardball and you end up having to go through an eviction. Though, as Dion talks about this binder strategy, he's never had to have that problem yet. So, but you still plan for the worst, in my opinion. So if you somehow bought the property without knowing all these things, it was a serious error on your part for not being educated enough. Your part for not doing good enough due diligence. Your part for not hiring the right real estate agent who should be asking these questions, because your agent should have asked all those questions and brought those documents to you. But what I disliked strongly was how they said, if you hear the term house hacking, run. They wanted to lump in people who talk about house hacking with the fake gurus, the get-rich-quick scammer type people that use other people's money to become a millionaire in 6 months. We'll show you how. Just buy our $1,000 course. I swear to God, the answer's in there. And if you don't find it, we are offering no refunds. Good luck. They, for whatever reason, want to lump in Zuber, the lumberjack, myself, Dion, Mark, my mentor, into the same category as these charlatans out there, which I think is a definite gross misrepresentation of what we're preaching. It's not get rich quick. It's get rich for sure with enough time. It's a get wealthy slowly. Dion always says 10 years. I think you could probably do it in like 5 to 8. If you're single, no kids, highly motivated, you could probably do it even a little bit quicker. Let me get back to these comments real quick, make sure I'm not missing too many of them. Let's see here. Still looking in the Gary, Indiana area. That was Adam's comment. Good job. I hope you find success. Message me if you need any help. Mark says, Adam, I have 20-ish rentals in Gary. No rent from 7 houses altogether. Yeah, times are changing. Again, people who are getting government assistance, now that that's going away, they're not prepared to start paying again, which to you and me seems ridiculous. But I always say this phrase as well. There's a reason some people are renters. I've got people who make $90,000 a year. A house in Gary, Indiana is $60,000. You make $90 grand a year and you can't buy a $60,000 house. Why? Your credit's shot. You have problems paying bills. Why are you a renter? Because some people are just going to be renters. They just don't organize their lives responsibly enough to not have to have those problems. Okay, Dion says, oh, wait, I already read that. Okay, Rob, Mike, are you making creative finance offers in your market? I will be. So I'm currently in the middle of 2 cash out refinance BRRRR projects. One of them closes November 7th. The next one should close. I'll close mid-December. I will get all of that cash back from those 2 projects, pay off all of the HELOC that I had used to fund those projects, and I'll be sitting around with some cash in my personal account and access to a HELOC, at which point I will get back into buying more properties. And then I will be doing creative finance offers. So I have purchased from a wholesaler. I've done 2 seller finance deals. I've done 4 deals off of the MLS, and I've done I did one more. Oh no, yeah, and then I've done 2 cash out, or I've done 2 all cash purchases with HELOC. So I've done a lot of different ways of purchasing deals. Real estate agents, MLS, seller financing, wholesale, all that type of stuff. Creative financing, I think, and Mike said it multiple times, and I agree with Pace Morby. I think that if you learn creative financing, you're going to be positioned to do extremely well in the upcoming market. Let's think about Uber. Taxi cabs, what made Uber popular? People did not want to have to go walk out to the street, wait for a cab, or live in an area where there aren't cabs, have to call the cab service, maybe they'll send somebody down there. Uber became popular because it turned everybody into a taxi cab driver. It saved you time. It brought time back to you. It made it effortless, and it went from person to person. Instead of dealing with a company, you're dealing with an individual. You got an app on your phone, you hit the button, they show up, you check the license plate so you don't get kidnapped, and you go. Uber, very smart. Let's look at Netflix. As much as I love to reminisce about going into Blockbuster Video or Hollywood Video, and there was the popcorn and there was the snacks and there was all the videos, just racks of videos, literally VHS back in the day. I am that old. And DVDs before they closed. Why did Netflix win out? Well, initially, I don't know if many of you remember Netflix when it was in its infancy. Initially, Netflix would mail you a little paper catalog with all these movies. You would circle which videos you want, put it in an envelope, send it back to Netflix, and then they would physically mail you copies of the CDs. I don't even think they offer the service anymore, but that's what Netflix started out as. You didn't have to go to a Blockbuster or Hollywood Video. You would just mail it back and forth. You'd get your stuff in 2 to 5 business days. Well, then they invented live streaming in 2010 or 11 or something like that. And there was, they don't have anything on it. They don't have any good product. But eventually everything has gone to live streaming. And so how did that business succeed? What it did was it made it effortless. You didn't have to drive. You didn't have to do any of that type of stuff. And it just made the transaction a lot easier. So creative financing. How is creative financing like those 2 businesses? In my opinion, it's going to make it so that you and I get to cut the bank out. My two favorite deals that I've done, the two that I've done that are my favorite, were the seller financing deals. There's no loan origination fee. There's no appraisal. There's no inspection required. There's no qualifying for the mortgage. There's no give me your bank statements, give me your tax returns. There's no credit check. There's nothing. You show proof of funds. Here's a bank account with my name on it with the amount of money that's needed for the down payment. I'm signing a contract saying I'm going to send it to you. I'm going to put the earnest money with title, and that's it. Way easier, much more streamlined, get the deal done much quicker, costs me a lot less than closing fees. You still pay for title search and title insurance because you want to make sure they have the authority to sell that house. But other than that, and I still do an inspection because I don't think you should buy a house without doing an inspection unless you yourself are skilled in the construction industry. But nothing's required. It's much faster. You don't have to worry about, oh, shoot, I keep $3,000 in cash on me. I want to go deposit into the bank, but this is going to trigger a bunch of red flag warnings because they think I'm going to launder my $3,000 of blood money to buy. So such a freaking pain in the neck. So you can still go buy a car before you close on a seller finance deal if you had to. Seller financing, if you learn it, it's going to be like Netflix. It's going to be like Uber, and then it's going to streamline the purchasing process. First, why are you outsourcing all of that profit to the bank? If I owned a property outright and I wanted to sell it and I didn't need the cash immediately, and if I sell my $500,000 property at a 5% interest rate over 30 years, I'm going to make $800,000. I'm going to make a ton of money, and I only have to claim on the taxes the interest that I'm earning. The original $500,000 that gets paid back to you, that's not taxable. All that's taxable is the additional money, the interest. And so seller financing, I think, is going to be a wave of the future. Cut out the middleman. Sellers will get the opportunity to directly make the profit on their house if they're willing to take it over time. And again, that's the other beautiful thing. It's negotiable. Amortize it over 30 years so the payments are affordable, but have a balloon due at 10. So they can refinance out 10 years down the line. You get a lump sum payment at that time. Maybe you're 70 years old. You don't think you're going to live to 100. Amortize it over 30. Give them a good payment. Balloon payment due at 10. There's so many options with it that I seriously see it being a wave of the future. All right, let's see here. Great question, Rob. Barry Holiday, buying investment properties, all cash, is so unrealistic, it's laughable. It's easy for Ramsey to say because he has hundreds of millions and makes millions every year from his show and from his books. I agree with you darn near 100%, Barry. If you're looking to get started investing in real estate, it's going to be damn near impossible to buy an investment property with all cash, even if you live in Gary, Indiana, where houses still go for $60,000 or $70,000. It's much easier there. It is much easier, but everything's relative. Yeah, your starting job at McDonald's is going to pay you $8 an hour there versus here, where the signs all say $20 an hour in Seattle. It's going to be very hard to pay all cash for an investment property or any property. I think Dave Ramsey's out of touch with that. I don't think that we live in the 80s anymore. I think it's darn near impossible. That being said, can you buy all cash? Well, yeah, I used a HELOC on my property here to buy two houses in Indiana, one of them for $60,000, one of them for $29,000. Then I remodeled them. So yeah, those opportunities to pay all cash come, but they come after you're already financially established, you're making money, you're able to access things like a home equity line of credit. And even me using my home equity line of credit to buy all cash, according to Dave Ramsey, he wouldn't see that as an all cash purchase because I went into debt with a HELOC in order to do it. So I still wouldn't have fit his rules of an all cash purchase. Dion agrees with Barry. Well done, Dion. Hey, for those of you out here watching, all 15 of you, I really appreciate it. I got 15 people watching and I have 13 likes. That's a really high percentage. So I appreciate you guys for that. Thank you very much. And hopefully this is valuable to you. We're going to go for another 15 minutes here. We'll get through these questions. And then I'm going to go pack for my vacation tonight. Let's see here. Dion, Barry, exactly. Maskey, or my buddy Mark, my mentor. I bought 4 houses with cash. The first one cost me $25,000. The next 3 were Burr houses. Yeah. So can you buy with cash? Yes. In Mark's case, if I remember correctly, Mark had a house that he owned. I think he took a HELOC on that to buy his first rental properties. And then I believe he used retirement accounts to cashed out retirement accounts with stocks so that he could pay cash. So yeah, if you have a big retirement account you've been investing into for 10, 15, 20 years, you might have that option to buy a cheap house. But I don't think anybody's walking up, to a freaking $500,000 house in Seattle and just dropping $500,000 on the ground. And if you are, good for you, dude. Barry, 99% of all real estate investors who are successful use financing. Agreed, 100%. Maskey says 1 was in Chicago, 2 in Gary, and 1 in Birmingham, Alabama. Okay, Dorian Sanchez, I'm working remotely while listening to your show. Yeah, it's just fantastic. And again, I am not against remote work. Not against it at all. But I'm also extremely pro group work because, yes, there is a competitive nature in certain fields that will arise if you have people thinking together. Iron sharpens iron. Test yourself in the crucible of debate. You need to be there to argue with other people, to learn from other people, to be mentored by other people. Not in every single job, but in a lot. So I can understand why some companies want their smartest thinkers to get back together and start coalescing to build better products. Let's see here. Mark says, I'm financially independent, living the hurricane dream. Yeah, Mark, sorry, man. Barry Holiday, Sam Zell, the largest individual landlord in the U.S., always uses financing. Yeah, so does Zuber. So does Dion. So does Lumberjack. So does my mentor, Mark. So do I. Maskey Finance. Mark has multiple houses that have been seller financed, traditional mortgages for him, his wife. Yeah. Clinton Roberts, watching at 1.5. Hopefully I can catch up. Yeah, man, hopefully you catch up. Make it quick, dog. Financial firefighter. My first job was working at a Blockbuster. No way, huh? Just giving people their popcorn and candy in their videos. That's so crazy. My first job, my very first job, I mowed lawns when I was like 10 years old so that I could have enough money to buy Pokemon cards. And you know what? Maybe one of my videos, I'll have to show you guys. I actually have an original Charizard, laminated and everything. For any of you who know what a Charizard is, and Dion might. Nobody else probably won't. But anyways, I was a nerd. Pokemon cards were popular when I was a kid, when I was like 5 years old in the 90s. So I mowed lawns, then I worked at McDonald's, then Walmart, then a Volkswagen dealership, then I drove semi-trucks, then I worked in construction, and now I'm a cop, a dirtbag cop. Okay, almost through these. Netflix stock paid for my renovated basement in Virginia. That's right. That's right. Beth Traverso. Yes, so I haven't released the video of me and Beth, but I mentioned it earlier. We did talk about why Seattle's the #1 declining market in the entire country, nationally. And Beth is a top 1% real estate agent for the entire country, and she specializes in the Seattle area. So she gave us her opinion. I'll get that video uploaded here shortly. And for those of you who don't know, Beth and Dion will both be at the November 12th One Rental at a Time live event in Fresno that Zuber is hosting. I will be there as well. I don't think I'm doing any presentations. I think I'm running around with a video camera, making sure that everything gets recorded. And then I will be getting all of the videos from that whole convention uploaded to YouTube on Mike's channel. I'll get it all edited up for him. Okay, but Beth says, my seller finance purchases have been the easiest and fastest purchases. Agreed, 100%. I love them. Rob, got a bail, get on a boat. Stud, later, good job, Mike. Thank you. Dorian Sanchez, is the Charizard PSA graded? So the story with my Pokemon card collection, when I was a kid, I took little index cards and I wrote my name and my phone number, and I walked around to every house in the neighborhood and I said, I'll mow your lawn for $5. I'll mow your lawn for $5. Now, even in 1998, 1999, $5 was a little cheap. I could have been charging 10 or 15, but you know what? They hustled me. I was a kid, whatever. Back in the day, a pack of Pokemon cards was $5. So I'm like, okay, mow a lawn, buy some Pokemon, mow a lawn, buy some Pokemon. So I would mow lawns like crazy. Birthday, Christmas, I'd ask for cards, had a good collection of cards. Now, when I grew up in a very tumultuous house. When I got kicked out of my house at 16 years old because my mom's boyfriend didn't like me, she threw them away. Threw them all away. And I remember at 16, even though I hadn't collected them in years, I was like, oh my gosh, all those cards. I worked so hard. This was the first thing I ever worked on. Well, turns out she didn't throw them away. She was just mad at me. She actually gave them to my brother, Sam, who held on to them for 10 years without telling me the truth. And then he finally let his conscience get the better of him because he heard me lamenting the loss of my long lost Pokemon cards at a younger age when I was like 27 or 28 years old. And he goes, yeah, so I've been meaning to tell you secretly, I actually got them. And I was like, what? He's like, yeah. And I was like, well, I want them. He said, well, you can't have them. But they're mine, dude. I bought them. He's like, yeah, but I don't care if you love them. They're mine. So for my birthday last year, he mailed me, and I was like, how could you put this in the mail? He mailed me my Charizard. And he has had some of the cards graded, and he's had the entire collection like appraised before, several $1,000s. And so I should do a video probably talking about my first ever investment. Because I remember as a kid, this was when Beanie Babies were popular. This is when Tickle Me Elmos were popular and Pokemon cards were popular. And out of all the different, trendy toys you could have purchased, all of the NFTs in the 90s, all of the cryptocurrencies. I picked the one that still has value today, Pokemon cards. I got the Bitcoin of kids' toys from the 90s. Everything else went to zero, but my stuff's still worth it. So, all right, we're going to end this here in just a minute. Mark says, I sold some great baseball cards for $500 in preparation to move to Florida. Yeah, baseball cards are pretty popular too. Folks, really appreciate you sticking with me on this live stream. I've had a good time. Hopefully it's been beneficial for you. If you have some questions, leave them down in the comments. Feel free to subscribe to my channel. I always appreciate the support. We got 20 people in here, 18 likes. Like, dude, you guys are the best. Honestly, I really appreciate it. I'm going to be making videos breaking down the numbers on the 2 BRRR burst strategy houses that I did. Releasing, because I made some mistakes. It's hard to invest at a distance. It's hard to remodel at a distance. Things went over budget. Things went longer to repair than I thought they were going to take. Things appraised less for what I thought they were going to appraise for. And interest rates doubled from when I initially purchased. So all of these things have gone wrong on my burr projects in Chicago and in Gary. Every bad thing that could happen. And I'll give a shout out to one other YouTube channel that you guys don't hear me talk about enough. Tom McKay wrote the book Flip Anything USA, has a YouTube channel by the same name, Flip Anything USA. He always says the reason people lose doing the burr strategy or trying to do a flip is because they don't buy it cheap enough. He's like, buying 20%, 10%, 20% under market's not good enough. Even 30% is not good enough. He wants you to buy 40 or 50% under market because that's how you insulate yourself when things change or turn on a dime. So because I took his advice and I bought stuff for so cheap, a $29,000 house, a $62,000 house, because I bought so cheap, even though everything bad happened, and I will release videos detailing all the full numbers, because I bought so cheap, I'm still insulated. I'm still going to make a profit. I'm not going to lose money. I'm still going to be okay. But that is really the only way you can invest at a distance and do those strategies. So it's my word of advice to you guys out there. If you are looking to do the burr strategy, I'm for it. It can work. I think right now, given the increasing interest rate environment, it's a very tough market to make it work in. So be careful. I think that's all the questions that we have. Appreciate you guys for being here. Let me know if I can do anything for you down in the comments below. Wish me luck on my vacation. Mark, look forward to seeing you in Florida, and we'll catch you guys next time.